I'm Ben with the BTC Sessions, and this is your bullish bit brought to you by Bitrefill.com, your one-stop shop for living on a Bitcoin standard. Sign up and grab gift cards for eSIMs, gaming, e-commerce, your travel needs, food, and much more, and you can buy them all with Bitcoin and Lightning. Sign up today and use code BTC Sessions 10 for some special perks.
Spend a lot of my time and background has been in the finance sector. And I feel like in the next 6 to 12, 24 months, we're going to see Bitcoin absolutely hit prime time in that field. And just going down a list of things that I think will happen over the next, say, 5 years with Bitcoin, dare I say it, we could see the super cycle starting, or this could be the start of a super cycle. Sort of go down the list of things that we've got in the next 12 months. We've got the ETF, we've got the halving, we've got the very real possibility that interest rates are going to drop. We're going to have quantitative easing, where cash coming back into the market on behalf of the governments. I think there's going to be a major oil producers start accepting Bitcoin for the oil or energy that they produce, and that's going to be a huge amount of demand. And then we're going to see potentially bonds backed by Bitcoin, or we'll see a flow out of bonds into Bitcoin. And to give you an idea of how big these markets are relative to what Bitcoin is right now, and I'll just start with the ETF. So, we've been giving advice on Bitcoin from a financial perspective for the last 7 years. And when we first started, we were only able to talk about Bitcoin being a 1 to 2% allocation of your total investable assets, because it represented an existential threat to your career as a financial or investment advisor. Having, in the last week, Larry Fink, the head of the biggest asset management company in the world, come out and say that he thinks it's a flight to quality, all of a sudden that allows any investment advisor worth their salt to have an allocation of somewhere between 5, 10, or maybe even 20% of a client's portfolio. That may seem pretty bullish, but that represents a huge amount of capital that's going to flow into this space. The halving, obviously, I think in contextual terms will be less of a big deal in relative to previous halvings, but it's still a big event in the Bitcoin community. And then we've got interest rates coming down, and that's going to inject liquidity of some sort, and you're going to have governments having to print money to put money in. And where does money flow when money's easy? It flows to, what's perceived as the highest risk assets. And we're going to see, I think, the mother of all short squeezes on Bitcoin, and we're going to see demand just totally outstrip supply. And you couple those demand drivers with the fact that Bitcoin's running off exchange like at rates we've never seen before. We've had 1.2 million coins run off exchange in the last 3 or 4 years. This sets up a demand supply curve like I've never seen before. There's nothing that exists like it. And when you couple absolute digital scarcity into the supply side, I think we're going to see things that no one believed possible in the next few years. And to put this in a context of, what we're sort of seeing, or what I think could happen, if you denominated daily oil trade in Bitcoin terms, that's roughly $10 billion of demand daily for Bitcoin, or 2.5 Michael Saylors entering the market every single day. That's a lot of Bitcoin. That dude's got 150,000 Bitcoin in his control. It's like all of a sudden these demand supply curves just get totally put out of whack. And then you look at the bond market, $60 trillion worth of bonds gets rolled over every year or refinanced or issued. If we had 5% of that going into the market, that's $3 trillion. Now, that's 7.5 Michael Saylors, or 14 Michael Saylors a week, 2 Michael Saylors a day coming in every single day. And the problem is, I don't think any of us really understand what this is. And one of the things that I saw this week, which I was really happy to see sort of brought to fruition, or, rediscussed on Twitter, was the multiplier. Initially, I think Luke Mikic did a great job talking about it, and Rip Von Winkle did a really good thread recently this week where, all of a sudden $1 into Bitcoin has an outsized return of increasing market cap by 20, 30, 40, 50, or maybe even 100x. And as Bitcoins come off exchange and the demand goes up, the multiplier effect actually goes up in value, not down in value. So at the moment, we might have $1 go into Bitcoin and it increases the market cap by 20x. Fast forward to those situations that I explained, $1 could have 100 or 200x multiplier effect on the total market cap of Bitcoin. And this is where I guess part of what's so important about what we all do is try to educate people on what this thing can do. I spend a lot of time looking at the finance demand supply side of things, enamored with the fact that there's nothing on earth that looks like this setup. It's a complete asymmetrical bet to the upside with, I think, a floor in the price now that I don't think we'll see 15,500. So for me, I think this is going to be fun because nothing brings more adoption to Bitcoin than the number go up. So in the next couple of years, we could see some crazy adoption.